The show focused on delivering beneficial information on everything to do with products and services that can improve your life. This is Experts on Call on AM 650.
Welcome back to Quay Pacific's Talk About Strata. Sterling Fox with you, joined in studio by Tony Gioventu, Executive Director of the Condominium Homeowners Association of BC and Vancouver, longtime Vancouver Province condo columnist. Condo Smarts every Sunday in the home section of the Vancouver Province. Tony, this is our insurance edition of Quay Pacific's Talk About Strata. Very, very important subjects to go through. We remind everyone that homeowner policy and an understanding, a very clear understanding of your liabilities is absolutely critical to moving into a strata occupancy with some peace of mind and some ability to deal with whatever may come your way, correct?
Exactly. Don't assume that anything is covered. Get the policy of the Strata Corporation, go to your insurance broker, go through them and find out what coverages are available for you and make sure that you're covered for everything from deductibles to liability to your personal property and betterments in your unit. One
of my friends here at the radio station, Jerry O'Day, lives in a strata complex and has at one time been the president of his outfit's strata council.
Yes.
And he's no longer on the board or whatever, but tells tall tales of conflict in some of these situations. And as a person who is elected to sit on the strata council, does one have to worry about insurance issues there too? If somebody decides to sue the council and you happen to be the president, are you on the hook, or are you covered by law that says what's the story here?
Well, there is an optional coverage that we commonly see through all kinds of organizations and foundations and associations, which is directors and officers coverage. And it covers things like errors and omissions. And within that, it covers the liability of the individuals who sit on Strata Council. It's a coverage that's optional, but I would recommend it for every Strata Corporation, Strata Council, because just in the normal course of your business, either you or the agent of the corporation could in error commit some error accidentally that results in a lawsuit.
Okay.
Right? You know, the Strata had filled in a form, a certificate of the corporation not disclosing an upcoming special levy for something. It was accidentally omitted. The person purchased, it would have changed the outcome of whether they purchased or not. They turn around and they sue the Strata Corporation. They're in essence suing the Strata Council or the corporation for an error or an omission that was committed.
And as a person who gets elected to sit on the Strata board, or the organization, corporation, to use your word, does the corporation pick up the tab for that insurance on an annual basis?
Unless the Strata Corporation has consciously decided not to have directors and officers insurance. And if they did, in most cases, I would say the Strata Council, no one would sit on Strata Council.
Well, sure, yeah.
Because nobody wants the liability. But it's an option, but most policies cover it, but you need to be very specific that it is included in the policy. But these policies also come with some kind of exclusions. One of the exclusions can be claims under the Human Rights Code. So if the Strata Corporation has discriminated against someone with a disability, a religious discrimination, or something that results in a human rights claim, unless there's quite a possibility that a Human Rights Code claim could be exempted from the policy for directors and officers. So there are all these little exemptions built into the policies, and some of them are to manage risks, but also some of them reflect the history of the Strata Corporation's liabilities and risks. They may have had a number of claims over the years, and the Strata and the insurers have just said, you know, we're simply not covering this anymore. They're managing the risk from their perspective. So Strata Corporations do and often frequently get sued as a result of an error or an omission, or there's been a human rights claim because somebody was denied access to the building because they had a certified assistance pet, but the Strata said absolutely not, you can't buy
no
in
dogs
here.
in this building.
No dogs in this building. They didn't buy. It turns out that the Strata can't prohibit certified assistance pets.
Sure.
They turn around, they sue the Strata Corporation. These are kind of real scenarios.
Oh, yeah.
Very real scenarios. And ultimately what happens is the Strata Corporation is either sued in the courts or there's a human rights complaint that's filed.
We can't drive our cars anywhere in the province of British Columbia without having insurance. It is illegal to drive without insurance. Is it illegal to live in a strata unit and not have some kind of homeowner's insurance policy?
No, that's because the strata does not insure for your personal risks and liabilities. They insure for the building and its assets.
Okay.
Individual owners, tenants, or landlords don't have to have insurance.
How often does it happen where somebody says, who needs that stuff?
Frequently.
Really?
Frequently, yeah. And of course, individual owners or landlords may be in breach of their mortgage agreements or their lending contracts if they don't have insurance. Their contracts may say they are required to have insurance. But nobody follows up on whether there's proof of insurance or not. And so invariably, they might let it lapse or not renew it, or they think, money's a little tight this year. It's not an appropriate thing to do because you're just setting yourself up for all of the liabilities that you may be exposed to. So strata corporations get sued. So what do you do, right?
Mm-hmm.
We've just got notice of a lawsuit, and what do we do? My recommendation to all strata corporations is the first thing you do is you pick up the phone and talk to your insurer, because your insurance, if it's covering a liability lawsuit, an error under errors and omissions, your directors and officers, a human rights complaint, odds are that might be covered under your insurance.
Now, a building, and we see lots of them all over the Lower Mainland these days, these strata towers going up.
Right.
Now, the builder of that building clearly has insurance as this construction phase is going on.
Yes.
Is it likely that the same company that covered the construction phase of this complex is also going to cover the occupancy phase, or does that generally, are those sort of mutually exclusive?
It's possible that the course of construction insurance, once it turns into a filed strata corporation, units are sold and is occupied, may then transform into a strata corporation policy with the same company. The companies are the brokers, right? They're not the insurers. They're the ones who are selling the insurance.
Yeah.
They go to the insurance industry, to the insurers, and they buy policies. And so, you'll find many of the same insurers or reinsurers on a number of the same brokerages, because they're basically negotiating the policies as a broker on behalf of the insurance company and, of course, as you, the purchaser.
Let me ask you, this is straight out of left field and has precious little to do with insurance, but it's just a political question, since we're now talking about officers and directors of strata councils or strata corporations. Let's take a building, a strata unit, in which there are 20 units.
Yes.
10 of them are occupied by individual owners. The other 10 are owned by one person or one development company, strictly for the purposes of renting those out. So here you have half the building occupied by owners, the other half occupied by tenants, who may or may not be represented at strata meetings by the owner of all of those units. So do the 10 individual owners how do they resolve issues in a strata situation when half of the units are owned by someone who doesn't live there and who may not really give two hoots about what the building looks like or what goes on, because they don't even live in Canada?
Well, that's a very real scenario in some of the complexes in the Lower Mainland. When you own a multiple number of units, you still have only one possible seat on council.
Okay.
So I own 10 units as an investor. I can be elected to council, or I can elect myself to council, but I still have only one seat.
Okay.
The other 10 owners each individually have a seat, so they may represent 6 seats on council. So with respects to decisions like bylaw enforcement and insurance deductibles and implementing the budget and all of those issues, it's still going to be a democratic decision of those 7 council members. So it's sometimes...
So there's not a possibility for tyranny of the minority, is what I'm thinking about.
Well, there certainly can be tyranny of the minority, but sometimes investors who have large numbers of units may find that they're actually at a disadvantage. They have a substantially greater amount of liability, and who's paying the deductible and how it's being collected, it's a decision of the Strata Council. The Strata Council is going to make that decision with respects to whose obligations these are going to be. So it certainly, as a landlord and investor, it's going to be important for the strata investor to look at what all those risks and liabilities are going to be.
Now, we've been talking about insurance for the greater portion of this program, and I'd like to review, because this, aside from obviously getting a mortgage and finding the right place for you and your specific needs, once those details, clearly important details, are ironed out, insurance has got to be the next most important consideration. Would you not agree?
I would absolutely agree that insurance is going to be a very significant decision as you go through this, because it's going to be a factor in even deciding whether you're going to buy into a building.
I would think so, yeah.
You know, if you go to a building with a $100,000 water deductible because they've had consecutive events in the last 3 years and it doesn't look like there's any change, you're potentially facing that share of that water deductible, and it could be purely accidental in your unit. It could be a pipe break that has to do with your dishwasher that causes a flood in the building. You're going to be on the hook for that deductible, so it's something to seriously look at. But there's other things in insurance, for homeowners and for strata corporations, are the kind of exclusions. And one of the exclusions I think that strata corporations seriously need to look at is underinsurance, because there's a clause in the policies that may limit the amount of insurance payable, and that's if a strata corporation is underinsured. Remember, the law said you have to insure for full replacement value. If you don't get an appraisal, and the appraisal costs money, so stratas like to scrimp on spending the money on the appraisal. If you don't get an appraisal and the value of your property has gone from $5 million in 1995 to now the cost of replacement is $11 million, and you're not insuring for that value, if you're underinsured, the insurance company is likely only on the hook for 50% of a possible claim, and there's no way of reinsuring for that as an underinsured amount. So
sorry, Tony, we're almost out of time, and I just want to make sure we get a plug for your website. The CHOA, the Condominium Homeowners Association of BC, has a fantastic website, CHOA, CHOA .bc.ca, for all the background information on this conversation and many others down the road. Tony Gioventu, always a pleasure.
Thank you very much.
We'll catch up to you next time here on Quay Pacific's Talk About Strata.